And welcome into Making Sense. Well, as we're getting close to the end of 2016, time really flies, doesn't it? You may be getting ready when you get into January about thinking about income taxes right around the corner. So let's give you some tips that you can still use through the month of December to make sure that your tax burden is not as great as you thought it'd be. We brought in the expert, Brandt McDonald, McDonald Hagen Wealth Management. 29 years sitting behind the desk, or some desks doing financials.
Right.
And
it seems like a month ago we were talking about planning for 2015 year-end taxes.
That's right.
It flies by.
That's right, yeah.
It really does.
Now we're 16s here, and I don't know if there's anything new or interesting. You know, a lot of our viewers have got grandchildren. We think about giving gifts and stuff like that.
So when we think about tax, we want to talk about obviously estate tax planning, those annual gifts. If you have, if you're fortunate, blessed enough to have a larger estate, then as part of that estate tax plan, go ahead and start getting those gifts done. You can do it through outright gifts, or you can do it into like 529 plans, planning for college tuition and things like that for your grandchildren. And then we get into the other things. You know, it's that time of year to pull out the check register and just start looking, what have I done in terms of charitable donations? What have I done in terms of funding my retirement account, whether it be a traditional IRA, a Roth IRA, or if you're still working, obviously a company-sponsored plan like a 401k or a 403b. Start looking at where you are in terms of the contributions you've made to those types of retirement accounts and see if you need to catch up, or go ahead and set a budget, say, for the rest of November and on into December. Those are critical things. And I always encourage our clients, because we do an incredible amount of financial planning with our clients. This is a really big time of year for us, because what I ask them to do is to go in and really take a look at where you are this year compared to where you were last year in terms of taxable income, total earnings, whether it's wages or bonus income, or a lot of small business owners who have LLCs or subchapter S corporations. Look at where you are in terms of total income for the year, compare it to last year, and start thinking about how can I manage that future tax liability right now, because once December 31 gets here, it's too late.
That's right.
So I really do think this is a critical time. You've got probably about 6 weeks or so left to take that deep dive into your personal checking account or your business account and see where you are on all of that. Things like, if you're a business owner, do you want to go ahead and make that equipment purchase, or what have you? Or if you're a sole proprietor, do you want to go ahead and make an investment? If you're a photographer, let's say, do you want to upgrade to that camera?
Get the new camera.
Right. So just a whole checklist of items that needs to be addressed, and looking too at your healthcare cost and so on and so forth. Trying to find those tax deductible items that you can reduce your tax liability, because as I said, once the 31st of December gets here, it's too late. That's right.
And of course, a big thing is charitable donations. You want to, if you do have the money and you can do it, if you can, maybe donate as much as $1,000 to $5,000, it can have a great effect on your tax.
Well, it really can, and especially when you consider reducing your tax bracket.
Right.
So, with our clients, we like to do the analysis, but then get with their CPA, because they're the final tax expert. And we ask the CPA, hey, could you do sort of a pro forma analysis of what this would look like for the 2016 return as opposed to what happened in 2015? Can we bring the bracket down, and what is the net impact of the overall effective tax rate if you were to make a contribution to a charity or something along those lines?
That's great. Okay, well listen, again, we need to let our viewers know that if you need the information, it's McDonald Hagen Wealth Management. You've always made the invitation that there's no cost for them to meet you, and at least show them some of the things that are financially a part of their lives, so you can start and have a jumping off point. Right,
exactly. Well, the CPAs love us, because we do a lot of heavy lifting for them, bringing all of the financial information into one spot so that it can be used in a better workable format. so that we can all collaborate together and come up with a great decision for the client.
Great. Thank you. You should come back in a week or so, and we'll take a look at 2017. And just remember this, December 31st, once it's here, 2016 is gone for many reasons. So choose wisely. And we'll be right back right after this.